Welcome to a video. Today I'm going to be talking about my top 3 ICT concepts which I use, and at the end I'm going to add a bonus 4th powerful ICT concept, so make sure to stay till the end of the video to understand all 4 ICT concepts that can help you in your trading and take it to the next level. If you get anything from this video, even if it's one little 1% better tweak, the aim of the video is complete and I am a happy man. So without any further ado, let's get into it. So the first concept is called the daily bias, and all it's saying is every day what is your expectation, and that is what is going to determine if you're going to long the market or if you're going to short the market. So essentially, if we look at a day candle, something like this, I'll just make it yellow just because yellow is a nice color, but essentially this is the previous day, and usually we'll have the wick something like this, so I'll make it yellow so it looks the same, something like this, right? So all we want to do is figure out if the next day is more likely to break the previous day's high. Let's say it was this area right here. I'll make this yellow, or if it's more likely to break the previous day's low right there. So that is essentially what the daily bias is. So the next day when we come into this trading day, all we are going to be looking for is there more likely to go up like that, hence it will be a bullish daily bias, or is it more likely to go down, hence it will be a bearish daily bias. And I've gotten a lot of good feedback, positive feedback on my daily bias video, which you can check up here somewhere, and people have said it's very mechanical, and the way I've done it is pretty much using order flow and swing high swing low market structure. So make sure to check that video out, and I pretty much use the exact same daily bias method for me and my students in my private community. But that is essentially the daily bias, because every day things are going to happen, but you need to know if you're going to long or short. You need a bias to actually trade the market. You can't just go in every day and just feel like trading or feel like shorting today. There needs to be a reason to it, and that is where the daily bias comes in. A daily time frame is a high time frame, so it's high enough to do a top analysis from a high time frame. Then you go down to the lower time frames and then figure out your entry model, etc. Now the next concept I want to go through is the power of 3, and this concept has literally changed my trading. So the power of 3 essentially consists of 3 phases, which I've done in highlighted boxes: the accumulation phase, the manipulation phase, and the distribution phase. So the power of 3, usually the consolidation is in the Asian session. It's not always a perfect tight consolidation, but essentially what we want to see is either the Asian high or Asian low get taken out. Now, if we are bearish, we want to see the Asian high, the highest point in the Asian range, get taken out. Then what we want to see is a tap into some sort of POI, maybe it's a hourly fair value gap, etc. And then we see a distribution to opposing liquidity, Asian low, things like that. But essentially, accumulation, by accumulating orders, there's buy side liquidity resting above here. So since we want to actually go down as our main objective, the market needs to fuel orders, so it manipulates the market first. So this is the manipulation, hence why it's called manipulation. Taking our buy stops, taps into a previous POI, and then it's pretty much we get our entry model and then distribute to the downside. So in a bearish day, this is what it would look like. On a bullish day, it's the opposite. This is what it would look like. So we would have sell side liquidity residing below there, something like this, or it's not showing because it's on the hour, but essentially sell side liquidity, Asian low gets taken out, taps into a POI, then this manipulation, we get our entry model, and then we shoot to the upside. So that'll be a bullish day. So this is the second power of second concept that I really like to use, and something that's really changed my trading, so make sure to check this out. The third concept I want to talk about are kill zones. Now, essentially, there's so much time in the day. The forex markets are open 24/5, right? So from Monday to Friday, they're open, but we need to find high probability timings to actually trade the market. And what are these timings? Well, this is where ICT kill zones come into play. So the 2 kill zones I like to use are the London kill zone and the New York kill zone, as shown here. And these timings are all New York time. All of my trade breakdowns and all of my explanations are on New York time, so you can just go here and change it to New York. But pretty much these are the timings you want to be using for finding entries in the London session, where the manipulation is more likely to happen, and then in New York, where there's usually a retracement or a sweep of London highs, and then an OT entry, which is what I like to use. That is between 8:30 and 11. And here's a quick tip. Try using 9 o'clock to 11, which I found even more high probability. That's another tip for you guys. Pretty much that is kill zones, so specific timings, time windows where trades are high probability to occur. So for example, 5 o'clock to 8:30 a.m. is pretty, choppy, no movement, no volume. But when 8:30 kicks in, there's usually volatility, there's news that drives the market. So you want to be in that sort of market condition rather than 5 a.m. to 8:30 where there's not much happening, low volume consolidation. You get the point. So that's 3. Now, number 4, the bonus are fair value gaps. Now, literally, this is all you need to literally get a full strategy and start trading. Fair value gap is essentially a market imbalance where there was so much volume that we never got to fill in price imbalances, price gaps. So it's a 3-candle pattern, and it's from the low, then we have another candle, then we have a third candle, and the third candle's high, and the first candle's low is where we draw the fair value gap from. So pretty much this whole gap is not filled. So what we expect to do, or expect to see, is price to come back, tap into this, and then carry on going down. And that is pretty much the entry model that I use on a daily basis. So if you want to see this entry model at work, go to my trade breakdown videos and you'll see the entries pretty much exactly like this. Well, at least the London session trades. So essentially we have a probably a sweep of liquidity there. We have a market structure shift right there with a fair value gap forming here. We tap into that and then we react. So just to show you, let's see on the charts some examples of reacting to fair value gaps. Here's a perfect example right here. We have a market structure shift right there. So we've shifted bullish. We have a fair value gap right here. 1 candle, 2, 3. This gap, as you can see, right there is the fair value gap. I'll just draw it out so it's more clear. Something like that. As you can see, we tap into it, react, and then push up to the upside. So that is one example of a fair value gap, but I encourage all of you to go onto your own charts and look at these concepts playing out every single day. For my indicators, this is the indicator I use for my sessions. So if I drop down to the 15, you can see that this is my Asian session, this is my London session, this is my New York session. So if you have these on, you can see every single day what is happening during these sessions, what is happening during these time windows, which I've already told you about, the ICT kill zones. So you have everything pretty much, the top powerful ICT concepts that I've shown in this video. Now it's up to you just to go back test, forward test, see how these concepts play out on a day-to-day basis, and go from there. And if there's anything else you would like to see, comment it down in the comment section down below. I'll be happy to make a video on it, but pretty much that is all for today. Happy trading, stay safe, and I will see you in the next one.